also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're going into a banking series and we're going to talk a little bit about banking from a credit education perspective. Please do remember that none of my videos constitute as financial advice. If you are looking for financial advice, please do speak to somebody that is certified and registered with the FSCA. Right, now today I want to start with the home loan facility. Now of course, I'm sure by now some of you guys have tried to apply for a home loan. If you haven't, then the video is perfect for you. But even if you have, I think sometimes, we're just reminded of some of the things that we should or should not be doing when we are trying to apply for a home loan. Now, I've applied for a home loan both in capacity as an individual who was salaried and as a self-employed person owning my own business, and I can tell you that the experiences is quite similar, but of course the requirements for you to actually get an approval is quite different. So let's start at the top. What is a home loan? A home loan is simply a loan or a credit facility that a lender grants to you to be able to buy a home where you are going to repay them back both the principal and the interest that they're going to charge over a period of time. That's basically what a home loan is. It is, of course, what is deemed in the banking world as a good credit, or what we call, what's the word that is just escaping me now? It's a secured loan. Why? Because there is an asset that is backing up the borrowing that you are going to be doing and the lending that the bank is going to be doing. This means that if you do default, basically the bank is saying there is an asset of equal value that we can sell, or at least of equal value that we can sell to try and recover the money that we have actually lent to you. Remember, you go out there and you look for the home of your dreams, and then you sign an offer to purchase and you go to a financial institution like a bank and you say, all right guys, this is the house that I want to buy. It's 1 million rand. I don't have 1 million rand. Can you guys please borrow me 1 million rand? So basically it's a partnership that you are creating, and that's what the home loan is. It becomes a partner to you being able to purchase the home of your dreams. So of course the home loan enables home ownership in South Africa. Now in South Africa, we've got different types of terms. You can choose the term, but the most popular ones are 15 years, 20 years, and of course 30 years. Now we'll get to why those different years will actually make a difference in how much you are going to pay back. So what would be the process of you applying for a home loan? In the olden days, you would go and apply for the loan. Before you even found the house, they could give you 3 million rand and you could go find a home of 1 million rand. This day and age, a home loan is attached, or a home loan application has to be attached to an offer to purchase, which means that you need to make the offer to purchase from the seller before you can approach the bank. People get very, very panicky at this because they're like, but how do I know how much I will actually get approved for? So how much house am I supposed to look for? Most of the banks have what is called a pre-approval system. So you go onto the banking apps and you do a pre-approval of what type of range could you potentially look at based on your income. At this point, they have not checked your credit status, and it's very important to understand this because a lot of people's dreams get broken down. Because the pre-approval says you can buy a home of 1 million, then they go look for a house of 1 million, and when the credit status now, or the credit checks happen, they find out that you're overcommitted and you actually cannot afford a house with 1 million rand. Because remember, it's not about how much you can afford, it's more of how much can you afford to repay back. So they don't want you to be overcommitted. So they look at what are you currently paying for, and then they try to fit in this new installment to see if it does not push you over the edge, like Wits gives you the edge. I'm just digressing. So that's basically what they're trying to do. So you can do a pre-approval. If you don't want to do a pre-approval, there are also what we call repayment calculators, affordability calculators. You can basically go anywhere on the internet. All of the banks have them. Even the property guys who list, like your Property 24, your private property, your Uber, the bond originators, they all have these types of calculators. Again, these are just algorithms, right? It's just to see and play around with your own real numbers to see what range of amount you can actually work with. Then you go and you look for the home of your dreams. Let's say you do find one, right? Then you sign what is called an offer to purchase with the sales agent or the agent that is there with you. You sign an offer to purchase. Now, don't make the same mistake that I made. Make sure that you are editing that offer to purchase so that it suits your terms and conditions. What do I mean? For instance, my offer to purchase had a suspensive clause which said that I should be able to get a bond at any terms and conditions. That means any interest rate from any bank and any term, which is the period. Now, you should be able to edit that. If the real estate agent is very stickly about you editing that, then maybe this is not the real estate agent you should be using, right? Because at the end of the day, it needs to suit your budget and your budgeting needs. That is very, very important. Right, now you've got an offer to purchase. Some of the real estate agencies prefer that you use their bond originator. What is a bond originator? A bond originator is somebody who's going to go out to the different banks and actually try to get you that loan that you are looking for. Now, why is it a good idea to use a bond originator? Because they already have the relationships with the banks. They already know the banks. And remember, when you apply on the system, sometimes you are just another application that comes through to Temba. Temba is hot fall on that day. Some of your numbers don't look right. Temba just goes reject, right? But when you have a bond originator, they can sometimes even motivate for you. So say, for instance, you've got informal income that is not necessarily seen on your bank statement. The bond originator can come and have that conversation with the sales agent. Or let's say it's time for credit, that they need to come to credit. The bond originator can say, look, yes, this person had bad credit as a student, but they've cleared it all and this is where they are. Because remember, with the credit check, the banks will look, some of them look even as far as 24 months before you actually apply for your home loan. So it's very important that you understand the role of the bond originator and you try and make it easy. So everything that you need to tell them, this is the time to tell them. Tell them how much income you get. If you've got additional income, if you've got people you're paying for that is not reflecting on your bank statement, you need to be honest with your bond originator. Now, obviously, I had a bad experience with the bond originator, but that does not cancel the importance of the job that they actually do, right? So that's why it's also good to have a very close relationship with that bond originator. But also remember, the bond originator is working for you and the real estate agent because they want a sale. So they want that bond to go through. So it's very important to keep that at the back of your mind, right? Next step after this is the other application processes. Most of the banks have online applications. I have found that Standard Bank is probably one of the easiest ones to do. I won't fight with ABSA. I won't fight with FNB and maybe ABSA. That's how I'll rank them. Funny enough, because I rank ABSA when it comes to vehicle asset finance first before I would rank them for home loans. So I rank Standard Bank very highly. I don't hold any home loans with Standard Bank, but I do hold them very highly in terms of the ease of their platform, right? If you don't want to do that also, there is a company called Mortgage Market. It's by a guy called Tim. He worked in the banking sector and he created Mortgage Market. And basically, you send your details to them, and they go to all of the banks for you. Again, they've got a great success rate because they know what to look out for before they even submit your stuff to any of the banks. They already know. So they will submit one application and it will go to all of the banks. They are very, very key in this industry because time is of an essence. And you know, we're the microwave generation. We want things to move fast. Okay, especially when you're buying a house, you're just so excited, right? So you want that process to move very quickly. It can be daunting waiting for a response from the bank. Now, everything has been done. Let's say your credit assessment has been done. Remember, they're going to assess you on two main things. One is your affordability. The second one is your credit profile. Your affordability, as I said, explained earlier on, when they bring in this new repayment, this new installment, will you be able to afford it, or are you actually just going to be choking every single month? The next one they're going to look for is your credit. How have you been with other credit agreements? Have you been diligent? Have you been paying? Are you committed to paying? Are you a good payer? Because remember, the bank needs to see you as an investment for them to believe that they can grant you this access to this big amount of money. Because let's be fair, a house is a very, very big ticket item purchase. So it's a very delicate process. So sometimes don't try to rush it. Then you're going to start getting offers. Now you don't take the first offer that you are given. So what do? For instance, they give you an offer in principle. Right? This is now based on them still coming to see the house. Is the house worth the price? So for instance, if you bought a 1 million rand house, the bank might give you an offer in principle, but they still need to come and do checks to see if this house is really worth $1 million. Because remember, as I said, they are your partner. So they also need to believe that this house is worth $1 million and we are willing to take our $1 million and borrow and lend it to you so that you can buy this house, right? That offer to principle can become your weapon, because you can go back, especially like a person like me. I got my offer in principle from another bank, and then I took that and I went to my own bank and I said, hello, can you see what those guys on that side are doing? Can you see what they're offering me? I need your girl to come to the party. And then you can start your negotiation process like that. Of course, it's not aggressive. It's simply just you saying, look, I want to keep all my stuff in one bank, so please come with a favorable rate, right? And generally here you're negotiating the interest rate and the loan term, right? Or you're even negotiating how much money they're going to give you, because sometimes some banks will say, we'll give you 90%, but you must come up with a 10% as a deposit. Some are willing to give you 100%. Some are willing to give you 80, 20, depending again if it's an investment house or it's a primary home, if it's your first home. So banks have all sorts of different types of criteria that they work with when they're actually trying to give out loans. And not two people are the same. So just because Nicolette got a 2 million rand home loan by FNB doesn't mean you're also going to get it, because me and you, our finances do not look the same. The banks do not see us as the same person or people, right? So it's important to understand this is where now the word personal finance comes into play, right? So it's important for you to understand that you cannot look next door and say, but you got a loans from FNB, so I'm going to go to FNB. No, don't do those funny things. It does not work like that, right? Okay, so now you've received your loan, you've accepted an offer. Now it's the big signing that needs to happen. Now before you sign, it's important to understand what are all the fees that are going to be involved at this very process. The first one, you are buying a house, which means that it needs to be transferred from the person, the seller, into your name. So there are transfer fees that you're going to pay to what we call conveyancing lawyers. They need to do that job. Now those transfer fees are tabled, so any internet, you can do a quick internet search and say transfer costs for property in South Africa 2023, and you will be able to get those transfer costs. It's a table that tells you based on the price of the house, this is the transfer cost that you're going to pay. Now of course we know that if a house is over R1 million, there's also what is called a transfer duty that you are also going to pay. Then additionally, if you have financed the house with a lender, a bank, an institution, then you understand that there also is what is called a bond registration fee that you need to pay. The bond needs to be registered at the deeds office to say, right now we are co-bond holders, you and the bank, right? So that on the title deed we know that it's your name and the bank's name until you actually finish off. Then the title deed gets released in your own name. But until that, the bond does need to get registered, right? And then there's also what is called an initiation fee. So this is to initiate your bond account. Remember, you apply for a home loan. The moment it gets approved and you sign and accept, it becomes a bond. You are now bonded to the bank, right? So there's an initiation fee because all of a sudden now you do have a credit account where you need to pay every single month so that you finish off this thing. So that's how it works. So bond, guys, there's going to be very big documents that you're going to sign. Read those documents. They are long, they are big, but take your time. And if you don't want to read, when you're going to the conveyancing lawyers or the bond originator or the bond lawyers, ask ask them what are the pertinent things that you need to be aware of in those documents. Ask them. They have to explain it to you. By law, they have to explain what is happening. They have to explain what happens when you default. They have to explain what is the process that happens if you can no longer pay. They have to tell you everything. One of the other things that you're probably going to start getting now is other parts of the department or other parts of the bank starting to sell or cross-sell certain products. The first big product they're going to try to sell you is what is called homeowner structural insurance. So it is the insurance to cover the structure of the house, so that if something does happen, there's an insurance that can pay for it. The second one they're going to try and sell you is bond insurance. Again, bond insurance is insurance over the actual bond. So if something happens to you and you're unable to pay the bond, they will then step in and be able to pay you your bond insurance. In other instances, they may ask you to have life cover. Life cover again steps in as an insurance policy that if you do pass away, for instance, or you've got temporary disability and you've got an income issue because you are unable to derive an income, that life insurance will keep paying that bond. Now, the bank is not the only place where you can get these insurance policies. You can get them outside of the bank. You can go back to your own insurer and find out if they offer these types of insurances. Sometimes you're in such a frenzy that you sign everything that is put in front of you and you don't realize what you have actually signed. So it's very important to make sure that you read what you are actually signing, right? That is very, very key. Okay, so now you've signed all of those, you need to pay those transfer fees. I'm actually always sad because a lot of people come into my DMs and they say, I did not know that I needed to pay transfer fees. So how do I fund these transfer fees? Should I take out a personal loan? Should I use a credit card? Now, very important, the bank, while you have not yet signed for the bond, I think even after you signed, I'm not sure, I stand to be corrected, they can rescind that bond offer or that home loan offer if you become over indebted. So if you go, so for instance, if you go and get a personal loan and it changes the circumstances of your budget, because now there's a new repayment because you're trying to fund your transfer fees, but it changes to a point where now again, all of a sudden, you actually can't afford the repayment of the loan. The bank can rescind that offer. So it's important to make sure that you understand all of these additional things that need to be paid upfront so that this whole process can actually work to your advantage. Very, very important. So that is essentially how you're going to apply for a home loan. Then it's going to get signed off and then you're going to get the keys to your house. When you get the keys to your house, the one thing that is also going to happen is that you need to get all of the certificates. If it's a gas certificate, if it's a wood certificate, if it's a roofing certificate, make sure you get everything, all the guarantees, everything that the previous seller needs to hand over to you. One of the biggest things that people don't do is they don't transfer the municipal account. No one is going to do it for you. The real estate agency is not going to do it for you. They're here to sell you a house. It's now your house. Boom, bang, make a plan, baby. And if you don't make a plan, you may find that you have issues with council because you have not transferred the municipal account into your own name. Sometimes, like for instance, my seller was very, very kind enough to transfer it. It still says his name, but at least it's transferred to my name, and I do get, you know, the statements, and I'm able to pay my City of Johannesburg rates and taxes. So very, very important. The other great thing is, remember, if you are buying on finance, you can offset the interest that you are paying to the bank as a tax incentive. So you can offset it as a tax break. So the government gives you the interest as a tax break. Home ownership is very important. But buying a home is not something that you rush into. I know that a lot of people try to do this thing where they fix their credit scores so that they can buy a home. Don't do that. Don't rush the process. Make sure that you are taking your time when you are looking for a home, because it's a big ticket item purchase, but also it's a place where you're going to live. It's a place you need to like. It's a place where if the door handle breaks, you're like, it's okay, I'm gonna replace the door handle, but you know what, it's still my home. If I can tell you the amount of things that are breaking in my house, you would laugh. But you know what, at the end of the day, this is my home, this is my casa mashile, and I absolutely love it. So it's important to make sure that that process of buying a home doesn't become too daunting for you. And then last but not least, and I think I started off with this, is that a home loan, of course, is secured debt because there's an asset that is attached to it. Now, the best thing of it also is the fact that that asset generally appreciates in value. So your home is going to appreciate over the years. You can even make improvements to your home to make it even appreciate even more. You could also actively be part of your community, whatever WhatsApp groups, so that you keep the community where your home is, the street where your home is, a valuable street. Because remember, if the street is kept valuable, the homes on that street are also going to be valuable. So it's not just about buying a home, it's also about just getting involved into a new community now. Because if everybody knows that, yay, there are robberies on that street, and everybody knows that, yay, the lights on that street don't work, or there are potholes, the value of the properties that are on that street are going to go like this. So it is about getting involved and start, even the estate, from an estate level, it's important to make sure that you are very much involved in the estate where you've bought your property, because at the end of the day, if I'm a buyer and I drive into your estate, the gate doesn't work, or there's like flooding, like there was one estate in Randburg, it's bluish, I can't remember what it's called. I wanted to buy an investment property. When I drove there was just damp, it was flooding at the parking lot, and that put me off immediately. I mean, the house was well priced, but I was just like, here I'm going to have problems, you know. So I always say, for instance, where I bought my investment properties, I absolutely appreciate the body corporate there, because oh my goodness, they are the strictest body corporate. But you know what, at the end of the day, they are taking care of the value of the properties that I have in that estate, and I appreciate that. So again, you may be part of that body corporate, or you may be part of a homeowners association, depending of course on what is the structure of ownership. So for instance, where I live, we're part of a home ownership, and the moment you actually buy a house here, you become a member of homeowners association, because together we're taking care of the estate. So it's things like taking care of the outside boundary, the driveway, the gardens, you know, all of that stuff. So you pay levies so that all of those things can be taken care of. If you're moving into a sectional title, you generally will become part of a body corporate, and part of the body corporate will have a trustees, and they're essentially again there to make sure that nobody just parks wherever they are, parking bays, because you don't buy a parking bay, you don't buy the garden, you actually only buy what's inside your house when it's a sectional title. So the inside of your house is what you actually own. So they make sure that the outside is what is taken care of through the levies that of course are there. And that's another thing, but I'm gonna drop it and I'm gonna leave it for another subject. It's important to buy into a body corporate that is solvent. Don't buy a property in an estate that is in debt. Woo. But I'm gonna leave it here. Let's talk about it on the next video. Mwah.